For we meet in an hour of change and challenge, in a decade of hope and fear. For the eyes of the world now look into space, to the moon and to the planets beyond. We have had our failures, but so have others, even if they do not admit them. To be sure, we are behind, and will be behind for some time. But we do not intend to stay behind, and in this decade we shall make up and move ahead. But why, some say, the moon? Why choose this as our goal? We choose to go to the moon. We choose to go to the moon. We choose to go to the moon in this decade and do the other things. Not because they are easy, but because they are hard. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win. The great British explorer George Mallory, who was to die on Mount Everest, was asked why did he want to climb it. He said, because it is there. Well, space is there, and we're going to climb it. And the moon and the planets are there, and new hopes for knowledge and peace are there. And therefore, as we set sail, we ask God's blessing on the most hazardous and dangerous and greatest adventure on which man has ever embarked.
Good evening, everyone, and welcome to our bi-weekly book club here in the Kingdom. We're going to do this broadcast in English, just to let you know that right out of the gate. So be prepared. If you expect to have a Norwegian broadcast tonight, you might want to retune your ears and get ready. For tonight, we have with us Nik Bhatia, a best-selling author who's been blowing mine and many other people's mind with his fantastic book, Layered Money, from gold and dollars to Bitcoin and central bank digital currencies. For me, this book really gave me a framework to understand not just the situation we find ourselves in today, but also a very simple framework to read monetary history, which has turned out to be extremely, extremely useful. But before we get that far, we have a few points we have to get through. During this morning's broadcast, I forgot to do one of our weekly traditions, which is to hand out a small prize to those people who have contributed the most to our community. Now, that prize isn't handed out entirely on random. We have a points system in our Discord, which you can join by checking out the description below. Normally the people who are at the top of that point system during our broadcast, when I announce this, goes away with 0.0025 Bitcoin. Now that doesn't sound all that much, but guys, that's like 250,000 Satoshis, and one day in the future you're going to be very grateful you took that prize with you home. So let's get that over with before we start anything else. And in order to pick who is going to receive this prize, I'm going to have to bring up this list, which I now realize I should have done before starting the broadcast, which shows us who are the richest in the kingdom. And I'm clearly just postponing here because I didn't do this in advance. And the richest person in our kingdom right now is Emil Nygaard Nilsen. So Emil, are you with us in the chat? If you are, this is your opportunity to catch a prize. And then we can get the prize selection over with right away and move on to our book club. Are you there, Emil? I'm going to give you about 15 seconds to respond. And then while you're thinking of that, I'm going to ask if Eskimo Taro or Yasin is here. The first person who's in the broadcast, who's at the top of the league, top of the table, will run away with our Satoshis for today. I know I'm probably the only person in the Western Hemisphere who's giving away his Satoshis these days, but somebody has to. All right, nobody's there. That's great. I get to keep my Satoshis for today. Nobody wants them? Nobody wants them? Okay, what about Svampe Max? How do you feel, Svampe Max? Are you paying attention today? Or maybe Everyday Coach? Yeah, I'm going to give that a last chance, and if nobody picks up on that, I'm quite simply going to move on to say good evening to Jan Erik and Christian, to Chimera, Kjell Bjarne, and to all of you who have joined us. It's just great to see our entire community coming out for this. Normally we have these morning broadcasts which are more market oriented. I understand they are more sexy. They've got the charts, they've got the targets and the quick profits. But I think everyone who's been paying attention to the kingdom for a while knows that what we're really about is to bring depth to this conversation. And so it's great to see that so many of you have moved over from the morning broadcasts to what else we have to offer. Okay, I'm going to go over to our book club right away. First, I just to tell you, I'm sweating like a pig. It is 36 degrees in Berlin, and I am melting away. And I put on the thinnest shirt I could find, and it's just really uncomfortable. So if I look like I'm Richard Nixon debating John F. Kennedy when I'm talking to Nik here, you know what that's all about. As always, check out our affiliate links in the description below, and always think that might be a super chat if you like what we're doing and you want to support us and see what we can do next. Just use that during the broadcast at any time. Okay, that was all the scheduled script. I had to get out of the way. Now I am psyched. I was lying sideways in my bed earlier this year reading this much longer than my wife wanted me to stay awake. And I'm finally getting the pleasure of saying good evening, Nik. It's good to see you.
Thank you for having me. I really appreciate it, Eric, and hello to your audience.
It's great to have you. How has your year been this far?
It's been amazing, actually. Putting the book out in January and seeing it disseminate across the planet, and seeing people that really love the book and hearing them reach out every day on Twitter has been very rewarding and a dream come true.
Has it been a big change? Have you always had a certain public persona around these questions, or was this book sort of your, what was the vision behind the book? What did you want to accomplish with it?
Yes, the book was meant to be an educational resource that could be valued for years to come with reference to Bitcoin. And it's the culmination of years of research into the US dollar, monetary policy, the Federal Reserve, and the history of money, really. And additionally, the exploration into Bitcoin and its role in the monetary future. So I really wanted to write a book that could last many, many years. That was the principal goal. And I'm happy to be more a part of the Bitcoin conversation now going forward. And I do plan to write another book about Bitcoin this year.
Exciting. So we have something to look forward to, but that is really interesting, because that's what really struck me about your book as well, that it really connects somebody who clearly knows monetary history really well, but then also understands Bitcoin really well. So what's your background? What brought you into this conversation to this point of writing this book?
I studied economics and finance in undergraduate and graduate school, and started right away in the bond industry. So in a fixed income strategy hedge fund first, and then a larger fixed income asset manager. And my role evolved into a US Treasuries trader and interest rate strategist. So from a rates trader perspective, I got to sink my teeth into global macro, and that's really my true interest and passion, is global macroeconomic study and research.
Right.
And so as a trader, I'm more of a button pusher, right? Just someone who's just doing the execution is what we call it.
Mm-hmm.
But I evolved also into a strategy role. And so that's where you get to use your brain and be a thinker. And during 2016, 17, 18 was when I was really coming into my own as a global macro strategist, but also simultaneously falling down the Bitcoin rabbit hole.
Right.
As a finance person, not as a software person whatsoever. So I didn't have that background. I just had the global macroeconomic background, but I saw Bitcoin as global macro. It was right at the center to me from the very beginning. And it just, in the end, pulled me away from being only a fixed income person to really wanting to introduce Bitcoin as a core tenet of global macroeconomics going forward. And so I had to shift my career from exclusively fixed income to predominantly Bitcoin,
Right.
while including the rest of the universe.
So this was actually a big shift for you personally as well in terms of your career.
That's right. I resigned from my position as a trader strategist and left the bond industry in an official capacity. And I don't have a Bloomberg terminal anymore.
Congratulations.
Thank you.
You're free now.
Yeah, so I'm without a Bloomberg terminal, but yeah, I'm also without the obligation to trade on behalf of other clients and in an institutional setting. So I get to be an independent researcher, which is what I still consider myself. I'm a researcher first.
So what's the reception been like? I mean, you must have had a big network in more traditional finance and people who might not be as open to Bitcoin as we are, but then you must have also received acclaim from people like us. So what's the reception been like since you came up with your book?
Yes, Bitcoiners have embraced it, and they gave me the confidence to write this book, because when I wrote The Time Value of Bitcoin in 2018 and subsequent articles relating to the Lightning Network and Bitcoin capital markets, that gave me the confidence and the energy to write a book about Bitcoin, because I knew I could tweet out a book and people would read it to start. And where it went from there was really up to me, and how well of a job I did writing the book. So that was the initial kind of fire to write the book. But then, yes, with my network, I had the ambition to write something that I could send them in the fixed income industry that they could also read and learn from. And that's the reception that I've received. So I've had contacts at some of the largest investment banks, both in United States and Europe, domiciled ones that I had trading relationships with, reach out to me either privately for conversations about Bitcoin, or are talking to me more in an official capacity and coordinating with media people on bringing me in for a certain consultation or interviews or things like that. So
how would you describe their tone? Curious?
The people that I'm friendly with have been very supportive and are like, starting their Coinbase accounts and other things like that, and are saying, I loved your book, and I learned a lot about the history that I didn't know, and I'm buying a little Bitcoin, and what do you think about other cryptocurrencies? And they're asking me all those questions. And then the people in a more official capacity are more just actually congratulatory, like, good for you, you made the move, you were clearly ahead of the game, because I resigned when the Bitcoin price was, I don't know, 5,000, 10,000, whatever it was at the time. So they're looking from a
private trade.
Right. Exactly. They're still thinking of it like, oh, it's a good trade. You made a good trade. Congrats on the trade. And but they want to know more, and they want me involved, and they trust me that I'm coming from their world, and that I will deliver to them valuable information, things that they can use. So I'm trying to develop my consultancy on that side.
You have to deliver something for them. You know what they're looking for.
That's right.
All right, that's great. So we're going to delve a little bit into the book, but obviously going chapter by chapter is something each of the viewers should do on their own by going to Amazon and buying Nik's book. But instead, we've put up sort of 4 main frames that we're going to try to get through. And we kind of brought it right into the first one. Now, I just want to mention to our viewers what the next ones are. So we're going to start talking a bit about the framework that Nik sort of presents in his book, how he looks at money, I guess, and connecting that to monetary history in our second bulk. Then we're going to look a bit about, like, where are we now? And then in the end, we're going to dive into, I guess, what everybody here is really for, right? The Bitcoin and CBDCs. What's going to happen? What do you know? Tell us your secrets.
So,
wait. Before we get there, first I want to start with monetary history, because first I think it's important to understand a bit, like, what's your view on money? Where did it come from? What is it in your view?
Money is definitely It appears to be two things, empirically so today and in the past. And those two things are some sort of bearer item, like historically gold. And today, I think more in terms of real estate as a physical item that people think as a store of value. But then there's also the credit aspect, which doesn't have to be tied to anything, can be created out of thin air. And that's in large part what our monetary system is today. It's fiat currencies, which are government issued currencies, a lot of times backed by nothing other than the debt of the government itself. And then associated commercial lending, which is private loans, mortgages, business loans, the bond market. A lot of that money is created from banks' liabilities out of thin air. It's backed by the promise to pay by those people that are borrowing the money.
Let's take a step back there, because you and I can talk about things being backed by things in the sort of most obvious sense. But that's sort of what the title of your book implies in the first place, layered money. So what are these layers that you're talking about?
The layers of money have to do with trust and balance sheets and promises. So the most simple way to describe the layered framework is a gold coin and a gold certificate that promises to pay that gold coin. It doesn't matter who's making the promise necessarily. The fact is that the gold coin has a certain monetary value, and the gold certificate carries a promise to pay. And if the promise is issued by something or somebody trustworthy, then that can also be treated as money. Right. And so we have to understand that money can be the thing itself or a promise to pay the thing, and both can function as money, but there is a hierarchy, meaning that there is an order to things. And in our world, both historically and today, the layers come from the balance sheet. The assets and the liabilities of a financial institution like a bank give us a first layer and a second layer of money, the first layer being the thing that is promise-free, and the second layer being the thing that carries the promise and counterparty risk.
Yeah, so you mentioned the hierarchy there, that like it's not as if all money is born equal, so to speak. And are there certain traits, certain characteristic that historically goes into what rises to the top of this hierarchy and becomes the fundament of all balance sheets?
Yeah, and there are, to be honest, only three things that have historically been first layer monies. Two of them are precious metals, gold and silver. So it's very empirical what qualifies as the first layer of money. It's only two types of metal. And everything else has been either localized or obsoleted. So shells, tobacco in Virginia, in the United States, and other forms of, metals or commodities have been treated as money.
That was a fun anecdote I learned from you, by the way, this Virginia thing. Do you want to take a second and tell me what that was again? Because I think our viewers will appreciate it.
Yeah, in Virginia, well, let's go one step back. When the English arrived in Virginia, in the early 17th century, they saw that tobacco was a potential boom, a huge profit potential for them. They could grow tobacco and export it and make fortunes. And so over time, the tobacco crop in Virginia was as good as gold because it was at the core of the financial system. Everything was
everyone
about
had faith in the future growth of the industry.
Right. And the crop itself was the delivery item. And so promises to pay tobacco became currency, just empirically, because people are like, oh, I'll pay you I'll pay you a ton of tobacco in 6 months, and here's a piece of paper with my signature.
So what's the weakness of such a system? Because clearly we know that we're not using tobacco as the basis of our monetary system today.
Well, there are two weaknesses. One is that tobacco is localized for Virginia, so it doesn't serve a great purpose elsewhere, right? Outside of the U.S. South, let's say, at the time. So that's one rate limiting step, which is not the case for gold and silver, which is why those two metals stood the test of time across.
Evenly distributed, right?
Right, and they were across continents as well. So it's something that was useful everywhere because people identified it as a valuable metal across the world, no matter what culture you were a part of. So that's one, and the other is leverage. So, and that's the case in every single layered money system, because inherently in a layered money system, not all the promises that are issued on second and third layers are going to be reserved by a commodity or a precious metal or something of that nature. And you know, that's the case all throughout history. We see financial crises that occur because promises are overextended, and that can be called leverage, or you know, it can be called many things, but it's all the same. It's all that promises are made in extent of what can be covered.
Yeah, maybe I'm misunderstanding that, but is that kind of connected to the same effect of why very few things have real scarcity? That if for example, there is scarcity in tobacco, or it becomes a monetary commodity, then it becomes valuable to produce more of it. Anyone who wants to make more money, if you can just grow it in the ground, and thus the supply of it will increase, bringing down the value of the monetary good, which then leaves a lot of people with monetary crop, if you want, that is worthless. Am I getting that right? That you have the promises that can't be fulfilled, kind of thing?
They're actually two separate things. So one is the supply response from something that's valued. So that's what you're describing is, if you know something is valued, then more of it will grow and the price will come back down and reach some equilibrium. But I'm talking more about the goldsmith in England example from the book, where a goldsmith can take 10 gold coins from 10 different people and issue those certificates as a deposit. Those can start to circulate, but then he can write those certificates and issue them to people that are not backed by gold. And what if everybody comes on the same day and tries to get their gold back? Well, he's issued in excess of 10 pieces of paper. So he's going to fail.
Reserve. That's what we call fractional reserve banking.
That's correct. That's correct. That is the definition of fractional reserve banking. It's that you don't have.
Is that basically just a bet that people won't try to cash their money?
Yes, it's a confidence game, and when you look back at history, nothing lasts with confidence forever, and so that's why in a small part, the introduction of the FDIC in the United States, the Federal Deposit Insurance Corporation, in 1933, which made deposits insured by the federal government, even though they were issued at private banks, because those private banks were regulated and paid into a system of insurance that made sure that people would be made whole on their deposits if things went south. That in 1933 was the first really large-scale introduction of an insurance mechanism to protect fractional reserve banking from an institutional perspective. So I think 1933 is a fundamental shift in the way that we as a population think about fractional reserve banking. In large part in the United States, it doesn't concern the everyday American because they don't have more than $250,000 in their checking account. So to them, Wells Fargo is as good as the US government, which is as good as gold. That's just their mentality. So there's a total link between depository money, which I call third layer money in my book, and the ultimate trust, which is in our system, US Treasury bonds or the debt of the US government. So there's no break in the mentality from the third layer to the first layer from the everyday perspective, which demanded this book to be written to demonstrate that that's not really the case. And if you look back at history, we can see where the lines became blurred and why it might not be a sustainable system forever.
Yeah, so let's take that, because that's super interesting. Like, where did the lines become blurred? And let's just start early there. Like, where do central banks come from?
Central banks come from the Bank of Amsterdam in 1609, which is a fascinating story. That comes from the Dutch East India Company, the VOC, which was the exploratory venture into the Asian commodity market, basically. These were ships that went to Asia and brought back commodities to trade. And when they brought those commodities back, they made profits, and eventually the shippers, the people that were going to Asia collaborated as a unit in a joint stock company. So this was the first example of an equity share situation that is now the most commonplace way to invest for people across the world, is they invest into shares. Well, this idea came from the Dutch East India Company.
The Amsterdam Bourse comes from as well.
That's right. That's right. And so the Bourse itself of Amsterdam comes from the need to trade VOC shares in a secondary market. And the Bank of Amsterdam was created as a clearing mechanism for trades in the Bourse. So that's why you have to, that's why you have to tell the story of the VOC to see where central banking comes from, because it's actually a response to trading, which is a response to the first ever stock in the Dutch East India Company. So it's a fascinating story on where central banking came from. And then it evolved into the Bank of England, where they they purchased debt finance from the Crown in England in order to rebuild their navy. So it was actually a war finance, with the big second central bank of the world. So the Bank of England
and state bonds and becoming sort of a buy or last resort kind of thing.
That's right. And
Bank of England.
Yes, and it's actually it evolved into a buyer of last resort, but it's almost started as the first buyer, the necessary first buyer of size to get things started, and so to use their own muscle to build muscle in a war effort. And we can see that throughout history as well, that central banking and war finance are very much so linked in the United States itself.
To this day, yeah. I mean, I just want to take one step back there, because the one thing that I really learned from your book was this bit about the Bank of Amsterdam and the monopolization of gold. And while I say that I really learned it, it's something that I'm still struggling to grasp. Could you try to enlighten me on this? Because it's confusing why citizens go along with such a proposal, how this was able to build up the trust of the layers that you're describing, and so on.
So within the city of Amsterdam, the decree was all gold and silver coins must be surrendered to the bank, to the central bank, and a deposit slip would be issued to the depositors of the metal. And that deposit is now legal tender and is the only form of currency that may be used within the city.
Was this a decree by the Bank of Amsterdam? Because the Bank of Amsterdam was not the government. So how could they? That's what I struggle, I guess. I mean, is this because the Dutch government at this time is one of the most liberal governments in the world, not a.
This is the city that did this.
Right.
So this is a city decree, and it created the central bank and its function. And so the system at the time was one of cashiers. Kaisers is the term in Dutch. And so the cashiers are what we think of were like the goldsmiths, where they accepted metal and issued paper deposits, and they were the ones that kept the coins themselves. Cashiers were banned from their trade.
Okay.
And they were required. So in order to keep a business open, the law was that they had to surrender the metal within 24 hours to the Bank of Amsterdam.
Mm.
And so they were
just the paper.
They were a middleman. Exactly. They were now a middleman between the paper and the metal. They could no longer be the bank.
So just out of curiosity, I don't think you've touched on this in the book, but could they then issue sort of third layer money? Because then they become a second layer of money, right? They have the deposits in the bank, and then you have the layer of the Bank of Amsterdam. That's the trusted layer. They hold a certificate, which is as good as gold because of the trusted Bank of Amsterdam. Could then they, if they gain trust based on holding these certificates, create a derivatives market for this?
This is actually what happened in the Bank of England. So about a century later, this is the system that evolved. With the Bank of England notes were then used as deposit in a 3-layered system, so that the bankers of England would use those notes as reserve and issue deposits, and those deposits evolved into a 3-layer money system.
Okay, after the Bank of England, the world sort of moves into a very chaotic century with 2 world wars and depressions and the creation of the Federal Reserve and all of this. So everything that I felt like I'd learned up until that point is sort of thrown into a disarray. What happens and how does that change this? Because I feel like I can follow the pyramid until about then, right? It's pretty straightforward until right about then.
That's right. It is pretty straightforward until about then. And it really, it comes into disarray because of the power of the United States, to be frank, in the world. And the history of world reserve currencies, says that it moves throughout time and they last about 100 years because that's how long the empires have lasted. Well, now we're getting into 300 years of the dollar, and the growth, and not that it's been the world reserve currency for that long, but for now 220 years, we're talking about a currency that has taken more and more place in the global economy. And in 1971, the US dollar broke from gold, but in 1933, the writing was on the wall that 1971 was an inevitability. So you have a confluence of things. You have the growth of the United States as the global superpower, not just during the 20th century, but starting, 100 years before that as well, and gaining momentum. And then you have the US policy putting it in a place where it could delink from gold and step forward into this modern era where we have telecommunications and we can send promises around the world really quickly now, even pre-internet, that really make gold a constraint. It's just a constraint now. It's no longer, it's just cumbersome. It no longer serves a great function. And so in the monetary system, that doesn't mean it stops being money. In fact, it continues to be money, but just with its role kind of siphoned off into the corner, where almost people don't have to pay attention to it. And especially that's the case today in the financial markets, where gold, if you're a bond manager or a stock manager, you don't have any gold, you don't care about gold, maybe you have some gold miner exposure, but that's, neither here nor there. So you have a confluence of all these things. And while gold is delinked from the system, the complexity explosion occurs.
Right.
And so post 1971, now all you have is an interlinked web of banking promises, whether it's central banks, private banks,
let's take it back a little step there, because I think before we get to 1971, I think Bretton Woods and trying to move into because we're from Norway. Where the fuck do we belong in this pyramid? Forgive my French.
Yeah.
There is clearly a sort of new global monetary pyramid, and everybody knows the US dollar is really important to it. But as far as I can see, there's something around Bretton Woods where we start getting dragged into all of this. So what happens around Bretton Woods?
And Bretton Woods, the layers of money between the United States and everybody else become ordered in a hierarchy that puts every single currency subservient to the US dollar in terms of price discovery and convertibility to gold. It basically puts the US dollar as the only link to gold and all other currencies only linked to the dollar. And in that way, the dollar became the currency of the world that was used, but the dollar itself that was backed by gold couldn't sustain that. So this whole parallel dollar system had to emerge. In Europe, that's what we call the euro dollar, which is an offshore dollar system that emerged to satisfy the demand for dollars outside of the ability of the Fed and US banks to service that demand for currency. So you have all these euro dollars, which are technically not dollars, but people treat them as dollars around the world because it's a banking system in where there's trust. And that's how it gets so complicated.
And yeah, now it's kind of taken for granted. But if we were to imagine a world in which this didn't go awry with 1971 and so on, would there be, without the context of World War II, any reason for any country in the world to go along with such a scheme of making the dollar the global currency? Because I can kind of see that as I can see benefits and disadvantages to the Bretton Woods starting point, even without World War II kind of thing, like where the world was moving in terms of technology and globalization. And
yeah, well, one thing for Norway that's specific is this petrodollar concept, and that's it's not just about World War II and Bretton Woods, but also that the the petrodollar is such a core function of the financial system, and so let me ask you. You tell me, in Norway, when people think about the reserve, their reserve asset, their reserve currency, what do they think about? Do they think about their currency? Do they think about government bonds? Do they think about gold, land? How do they think about that ultimate store of value?
It's interesting because if you hadn't brought up oil at first, I probably wouldn't have intuitively thought of it. But it is obvious that, yes, to Norwegians, oil is the reserve currency. We built up a huge state pension fund, which everybody just calls literally the oil fund. That's what it's known colloquially as. Most people don't even know it's called the state pension fund, just the oil fund. So I think that sort of answers the question in itself, regardless of my thoughts of what actual monetary value might be. So that's a interesting point.
Yeah, and so everybody thinks of currency differently, and I wrote Layered Money to open people's minds to try to find where your money is in this hierarchy and decide if that's what you're okay with. And when you learn about the layers, you might not be okay with the layer of money that you're exposed to, and you might be okay with it. And that's really people's choice. And so, to bridge it into Bitcoin gives us this ability to have a first layer money that doesn't have any balance sheet exposure. And that's why we have to explain the history of balance sheets to show you that Bitcoin doesn't come from one.
The Bitcoin isn't owed to anyone. There is no debt.
That's right. There's no debt in the system. Now, if you have Bitcoin on an exchange, now you are part of a layered Bitcoin counterparty system, but Bitcoin itself doesn't have that. And exactly. So comparing PayPal, I don't know, what do you guys have as your main peer-to-peer payment processor for local currency? What do you guys use?
It's called Vipps, and it's a local Norwegian, but yeah, PayPal.
And it's a private company, not sponsored by the government, or it's part of the.
Well, I don't know. It's probably everything in Norway is sponsored by the government. There's not a single company that doesn't have a stake. But Vipps is actually interbank, so lots of banks. There is a private company, I think, that's created a solution that all the banks choose to use.
Right. And so you have to understand that VIPs and Bitcoin are not the same thing.
Yeah.
And you guys already have a technology to send money to each other really fast and free and easy. It's called VIPs. And so Bitcoin is not the same thing. It doesn't serve the same function. And most importantly, it doesn't derive any value, any genuine value from being a good online way to pay people.
Mm-hmm.
It derives value from being a neutral, non-government currency.
Right.
That's where all the value comes from. So the book is meant to explain that comparing VIPs to Bitcoin is not comparing apples to apples, and that comparison needs to stop and has to have some context to it.
So in Norway, we have this really interesting guy called Torbjørn Bull Jensen, and he shared a thought about money, and it's sorry, I just have to remember this thought because I thought it was an interesting one in the context of these pyramids of the trust circles. That historically, whatever you could use as an exchange as a monetary good. Within a family, you don't even need to use anything because we can simply rely on a certain level of reciprocity and ability to follow up on one another. And if you have a family or local community, obviously, soon enough, you'll have some business partners. Maybe you don't even have to exchange the monetary good at all. Credits are fine, and then you just eventually create a bank that becomes a trust circle that encompasses a bunch of businesses where they all settle whatever credits they gave each other, and then eventually that bank's become part of some bigger trust circle, a jurisdiction like Norway or jurisdiction like the US and so on. And for me, that was really, really useful to understand just how much bigger Bitcoin is. Once I'm just sharing a thought of my own here, I guess, but just the fact that it moves beyond the jurisdiction and that you don't need any jurisdiction to enforce it. The jurisdiction that you are, in fact, dependent on. Without jurisdiction, no Bank of Norway. Without jurisdiction, no contract, nothing. But you don't need any jurisdiction, no police, nothing to enforce the contract rules of Bitcoin.
And you're absolutely right. And Bitcoin is global, and it is truly neutral, and it is truth that you can verify. And there are no promises embedded that you can't see. Mm-hmm. And all of those things give it value. And we can always say that look at the price, look at the market capitalization, and you can see that Bitcoin is valued. But you can look at the on-chain volume as well and see that people are using it to settle between each other and just use it as a monetary good. And there is no one Bitcoin price. It comes from everywhere, all the exchanges, in all the currencies. And it is now more and more a monetary gravity and an arbitrage mechanism across fiat currencies. And that's the direction we're going. If you want to really look out, where's Bitcoin going over the next 10 years? It's going to be more and more the gravity of the capital market, where we think about Bitcoin in its dollar price, but in the future, it's going to be everything priced in Bitcoin from a global asset perspective.
So just before you came on the broadcast tonight, you tweeted a tweet in Norwegian. You wrote, "Price is truth." And we're going to take a short break now, 5 minutes. But I think that's a perfect place to pick it up when we're back. What do you mean when you say price is truth? So thank you, Nik. We'll be back in 5 minutes. Catch a breath of fresh air, and see you in a moment.
Thanks.
It's 1800 Moscow time, and Elon is stirring shit online. Paris Hilton added laser eyes, And Mike Saylor shared another quote. And Peter Schiff, well, he's going broke. And all my hornets scream decentralize. So quit asking me your questions, 'cause I just don't want to answer. I'll talk about the energy once you've read the Bitcoin Standard. Now I'm buying every dip while you're perched atop the fence. If you don't believe it, then I don't have time to convince. Don't tell me your dollar is a little bit stronger when it's built by inflation and war. Join Buffett and Munger, 'cause I'm hodling longer. Move along, I've got value to store. Have fun staying poor. Have fun staying poor. Keynes has sold the golden lie, and governments will not deny. But there's a secret they're not wanting you to know, but they don't know anything about stock to flow. So I'm buying every dip while you're perched atop the fence. If you don't believe it, then I don't have time to convince. Don't tell me your dollar is a little bit stronger when it's built by inflation and war. Join Buffett and Munger, 'cause I'm hodling longer. Move along, I've got value to store. Have fun staying poor. The aggregate is spending, and the banks won't stop their lending. Just sit back and watch that money printer go. You put your faith in cash and gold, while I'm stacking sats with fold. And I'll be laughing as we store $1 trillion more. Don't tell me your dollar is a little bit stronger when it's built by inflation and war. Join Buffett and Munger, 'cause I'm hodling longer. Move along, I've got value to store. Don't tell me your dollar is a little bit stronger, because the basement will make us all poor. Join Buffett and Munger, 'cause I'm hodling longer. Move along, I've got value to store. Have fun staying poor. Have fun staying poor. Have fun staying poor. Have fun staying poor.
All right, welcome back, everyone. I hope you enjoyed that first half of this fantastic episode with Nik Bhatia, author of Layered Money. Before we get started again, I just want to remind you, we do have a super chat here on YouTube. So if you like what the Kingdom is doing and you'd like more people to get more content like this, there's a couple of things you can do. You can use the super chat, of course. You can subscribe to the channel. You can like this video. Or if you want to support us more directly, but without actually lifting a finger almost, just click the damn affiliate links and register on one of the websites we recommend. I assure you, we don't recommend anything we haven't gone through ourselves. We actually know the founders of each of the companies that are in our affiliate links. So test them out and you'll be supporting us and the work we do. We really appreciate that. All right, thank you. Welcome back, Nik.
Thanks.
All right, did you get to stretch your legs a little bit?
Yes, I did.
Good. So I'm going to jump straight through it because I thought it was an interesting quote you shared with us. Price is truth. What does that mean?
From my perspective, I have a trading background. So in the markets, we have a saying, price is truth. The price is what people are willing to pay for it. And that tells us all the facts that we need to know. You can read headlines or you can look at the price and you will be able to deduce the same thing. So I always like to look at the price because it's the purest signal that we have. And I say the phrase more and more because Bitcoin's price is telling us something. It's telling us that a once in a generation thing is occurring, and it's something to pay attention to. Like I said, I left industries for Bitcoin. So I believe that to my core. And if the price of Bitcoin goes all the way back down to $800, let's say, the price is the truth and Bitcoin is dead and I need to move on. But it hasn't done that. In fact, it goes up and then it crashes, but only so much so, and then goes up again and crashes. And each time it crashes, people get so dramatic about it, but it crashes to a level that's much higher than the previous all-time high.
Right.
And so there's a lot of dissonance in that. And so, I remind people that look at where the price is relative to where it has been in the past. And that will tell you what's going on. And so look at Bitcoin's price over a long-term time horizon, and it's telling a very important story.
Obviously, I absolutely agree, but I actually had a slightly different thought when you said that quote. I thought you were referring to the fact, or at least something that a lot of Bitcoiners often point to, that prices are, price signals are not honest under fiat. Under an inflationary system, we don't have the price signals to make good decisions for ourselves, to make good decisions for our families, for our communities, for our countries, for our companies. Everyone has their signals distorted, and the accumulation of bad decisions is the moving away from truth that price sort of represents in terms of action. But obviously that is, in a more micro level, absolutely true about Bitcoin as well, right? The Bitcoin price is sort of a manifestation of this very, very effect, I guess.
Yeah, it's a great point that you're making. So when I say price is truth, I'm talking about from the way that I said it, like the price of things is what we observe, and Bitcoin's price is telling us a story. Right. But what you're saying is also true, and it's actually so much an important part of Bitcoin, is that many people believe that it is the only truthful price signal that we have. And because it's the opposite of the current system, so it's the inverse. And people have assigned that to gold. There's a saying that the price of gold is 1 divided by N, and right. N is the trust in governments. And Bitcoin fits that same bill. And that's what if I understand you correctly, that's what you're talking about, is that Bitcoin is the only price signal that we have that we can really value, because we look at the stock market, we look at the interest rate market, and we can tell that there are actors in there. It's not that those prices aren't truthful. They are truthful, but they're within a denomination that we might not believe in. Right. And so Bitcoin is an opportunity to have a completely separate denomination.
And the fact that you can then have a pricing in the market that's open 24/7, 365 days a year. There are no capital controls, and there are no automatic shutdowns of markets that don't perform the way some jurisdiction would like the market to perform. And right. Then we should all pretend the next day as if that doesn't all make us get wrong price signals. And in Bitcoin, right. That's just not possible. Which brings me...
Yeah, and so you're talking about a much more holistic view of Bitcoin being a truthful price mechanism than I intended for it. But I agree with you.
Well, I was trying to build that into something that I wanted to bring up with you, which is sort of the last point in your title, the CBDCs, right? Because here you have this open standard that's priced 24/7 and so on. And now comes the governments and have clearly realized that this is the trend, picked up on the same signal you did from the Bitcoin price, I guess. and now they're trying to come up with a response. First of all, what is a CBDC? I'm not sure if I'm fully grasping it myself.
A CBDC still isn't fully defined because they don't truly exist in like across countries and all that. The word CBDC means central bank digital currency, and in its most simplest form, it's a liability issued by the central bank that's meant to be on par with your cash instruments, banknotes. It's meant to replace banknotes. But that's even itself a very simplistic definition of what it is. And right now, central banks all over the world are exploring the issuance of a digital currency and how it may serve their central bank the best. And different central banks will make different decisions. The Norwegian central bank, the Norges Bank, has made clear their intentions to continue their research on CBDC issuance. The Swedish central bank has a e-krona project that's well underway. The ECB is making their digital euro project, or advancing their digital euro project, and releasing a lot of literature about it. They're all focusing on unique aspects of currency function to satisfy what their purposes are. And so, they're largely undefined still.
So if I'm playing around with this asset, and I like my country, I trust my country. Most of the politicians running our country, thankfully, are decent people, even if they might disagree with me politically sometimes. And so for me, I'd be open to the idea that the Norwegian bank could issue an asset that I might trust. But what I struggle with is, if I take this out to the abstract, how would such first of all, how would the technology of that work? Like, would this mean, if it's going to be cash, does that mean that each coin would have to have some kind of hash, just like Bitcoin, where you can identify each separate part of it? Is it an open ledger? And if it's not, why would people have trust in that relative to something that has an open ledger? And if this asset is only backed by the government, if they don't have Bitcoin in their reserves and it's not convertible to Bitcoin maybe, then why would somebody choose a local closed system over an open global system? I don't know.
Yeah. So you just asked like 9 questions that are all at the core of what the central banks are trying to figure out right now.
Right.
So they're trying to make the decision: open ledger or closed ledger, privacy or complete surveillance, transmittability to any party or restricted in the participants, hashed or not, which is also kind of the open or closed conversation. Use it abroad between like 2 people in New York sending digital euro to each other, allowed or not. Wallets being managed by private companies or banks, or only the central bank. Whose app is it that you have on your phone? Is it the Norges Bank? Is it Nordea? Or is it?
What's the role of a bank after the central bank?
What's the role of a bank? And then here's another one. If we issue a digital currency, does that obsolete commercial banking in any way? And do we have to put caps or negative interest rates on the amount of digital currency that people can hold in order to prevent them from fleeing the depository institution framework that we have that supports all these jobs? So all of these questions, none of them have been answered officially by any large banks. But Sweden, Europe, they're making or they're writing papers. The Fed is writing papers too. We're starting to see it unfold, but we're still a couple years away from this picture really coming into clear view. The most important takeaway from all of this is that Bitcoin is not the same as any of that. And it goes back to what I said. It derives value from being a non-government currency in the first place. It doesn't derive value from being digital. It derives value from being incorruptible by the governments themselves, a global, truly global, auditable currency. And so Bitcoin will continue to thrive in a CBDC future, regardless of what any of the answers are for the questions that you asked and I asked. It doesn't matter what the answers are for Bitcoin.
I believe that too. I'm actually trying to figure out how CBDCs could possibly succeed, because I don't quite see it. But I'd like to see and, you know, be critical to my own thinking about that.
Yes. Well, they're definitely going to succeed, and it's going to replace depository banking for a lot of people. The banking industry will shrink as a result of this. I'm not saying it'll go away, but on the net, it will get smaller. The deposit base will shrink as digital currency issued by the government is in circulation. Government employees get paid in it. McDonald's accepts it. It gets into the economy, and people just have Fed coins or e-krona on their wallets, and you know that's how it's going to function. I completely believe that central bank digital currencies will be disseminated in a forced manner to the point where they are circulated, and paper money and coin money will cease to exist.
Okay,
eventually.
So here's a trader in me that sees I'm part of an open system like Bitcoin, and I'm seeing somebody creating an inflationary system of any kind. Obviously, my impulse is to just speculate in borrowing for as long as I can and just let the loans inflate away, you know, forever in my ever appreciating asset. So they can't create an inflationary CBDC. And if they're going to create a deflationary one where they, you know, reduce the keep the monetary supply completely stable or reduce it over time to sort of compete with this fact that they're not going to be just speculated away, then how do they avoid the deflationary spiral in which they are rightly worried about, given the extent of the government and extent of government employees and loans and so on?
It'll definitely be inflationary. It'll be the mechanism by which governments use to make benefit payments to their people. So universal basic income will be paid in central bank digital currency, and it will be an inflationary currency, and it will be issued.
How do you then avoid it just being speculative? Because if I'm receiving my universal basic income in Norwegian kroner and it's inflationary, I'm just going to buy all the Bitcoin I can at the moment I receive it, because now I'm having it in an appreciating currency instead of the one that is constantly being expanded.
See, Eric, what you're talking about is the second order effect. Okay. That's why you and I are long Bitcoin, is because we see 2 and 3 order effects ahead, but the government cannot see that. They can only see 1 order effect away. And that issuance is inflationary. We're going to buy Bitcoin maybe because of it, but not everybody will. And the price signal will take time to convince them that what they've done is wrong. And what you're doing is exploring into the future of the death of fiat currency, which is something that is beyond.
Not necessarily the death, but I mean, you know, you can just, like, fiat is proven in a sense. It's remarkable how far you can actually milk this thing. You know, you know. If
you're not talking about the death of it, you're talking about $1 million Bitcoin, $5 million Bitcoin. And so what, again, if price is truth, what story does that tell? Does it tell the death of currencies? And not that they won't be used, but that, you know, the value has gone to zero versus the new currency. So my point here is that those, the effect of $1 million Bitcoin and $5 million Bitcoin on governments several years from now is really not something that I speculate on. It's just so far into the order of effects. Like, I can't think in 15 order effects and how that's going to happen. I'm focused on the 2, 3, 4 order effects that I can think of right now. If the first order is UBI, universal basic income via central bank digital currency, the second order effect is prices go up as as actual real inflation starts to get in. Because right now, when central banks do QE, that doesn't mean people have money.
Right. It's
only when fiscal stimulus comes through. So CBDCs is the marriage of fiscal and monetary policy. And I think that that's probably the best answer to your question. What's a CBDC? It's the government realizing that they can use the central bank to just issue money to people instead of what we thought of in Milton Friedman's terms as helicopter money, where you'd actually have to take paper notes, get into helicopters and drop them over cities to get inflation going. That's the second order effect, is prices going up because of that. The third order effect is how governments respond to...
Just shoot in on the second order effect, and probably the price of Bitcoin also going up as people will have more available capital to put into Bitcoin.
That's right.
And the third order effect,
is how governments react to that higher price of Bitcoin. Like when Bitcoin is priced at $5 million, they've realized that, you know, the currency regime is not what they thought it was. And so that's where I can't go on to the speculation on how they'll react and, you know, what the world will look like, what prices will look like. If you're an international traveler going from airport to airport, are things in the airports going to be priced in Bitcoin? Is everyone going to be accepting Bitcoin in addition to the local currencies? Like when you go into duty free, you can already pay in a few different currencies. So how does all that shift in 10 years? How does that affect governments? How does that affect the European Union and people's willingness to be part of the euro? All those questions are things that are very speculative, and I like to brainstorm them, but I don't like to concretely answer them, because then you're talking about something that no one can really predict.
I'm just picking your brain. I'm not demanding.
Yeah, no. But I like to specify where I stop speculating, because I do actually like to speculate out to $1 million Bitcoin, even $5 million Bitcoin, because these are things that are in the context of the numbers that I've run myself. I think Bitcoin can be a $30 trillion asset in the next several years. That is going to change the world in a lot of ways. And I'm excited to see those changes unfold. And I like to see them unfold faster than I would have previously imagined, like with El Salvador. It's very exciting to see how quickly Bitcoin is moving throughout the planet.
All right, so that's a good ending here, but I do want to hear your last thoughts on El Salvador, since you brought it up. What do you think the effects of that will be, and do you think we'll see other countries following up soon?
Yeah, es muy importante. In Spanish, it's incredibly important. It is setting the precedent, and that is all you need to know here. Now that the precedent is set, other nations can follow, and here's what has happened. And this is the most important kind of minor news item that has happened as a result of this. Small African nations, leaders of the nations, are now writing letters to the central bank governor saying, what is our policy and attitude toward cryptocurrency and Bitcoin? And that is it's a snowball effect. It's an avalanche. It's a domino. It causes the questions, which will cause the answers. People will read Layered Money, Mastering Bitcoin, the Bitcoin Standard. They will find people online. They will find leaders, thought leaders like yourself, like the people in Norway. When they see the El Salvador news, your volume must have spiked in the minutia, because people are looking to who is already talking about this, and what are the messages that maybe they're right about something that we haven't paid attention to. That's what happened to me in 2016. I said, holy shit, I might have missed this.
Every generation feels like they missed the Bitcoin train, right?
But they haven't missed it. It's still incredibly early. Largely people don't understand it at all. If you turn on the TV and hear about how they talk about it, and maybe compare it to PayPal or Vips or some of these things, you know that they don't really understand it yet. They don't know what hash power means. They think that it's wasteful to mine Bitcoin. Instead of that's where the value comes from, because that's where the neutrality, like I said, It's has value because it's neutral, and it's neutral because it's hash power, the energy that backs it.
So funny thing is that Norway obviously has all the perfect conditions in the world to become the #1 nation on Earth, probably for all future, in terms of mining and energy production around mining and everything that goes with it. We can be early adapters in it. We have the capital to become the next MicroStrategy tomorrow without even breaking a sweat, right? And yet the stability and safety of our nation is probably the biggest hindrance we have to make that move early, to make it at a point where we could benefit from it. And here's the funny thing. For 20, 30 years, Norwegians have been debating, what are we going to live off after the oil? And people have come up with the most moronic suggestions, you know? Not going to list them all here, but everything from making shoes to making comedy, you know? And here we have a genuine thing, a real thing, probably the only real suggestion that's come in 30 years of something that Norwegian energy can be converted to that would be a net good for Norway and for the world, where we wouldn't just be contributing to something very profitable, but possibly also to something quite idealistic in a sense around the world. We would securing an open network against dictators and against oppressive regimes and criminals and everything else. So it feels like it aligns, and then it's sadly comedic to me that Norwegians don't appreciate that this is the next oil, and we're probably not going to choose to mine it.
Well, you keep spreading your message, and arbitrage will drive, you know, the future. And if Norwegians can't capitalize on that arbitrage soon enough, then that will stand as a detriment. But I actually do believe that forward-thinking countries will recognize Bitcoin for its value, and especially for its empowerment. And if it's a nation with a strong moral compass, they will eventually find the value in Bitcoin, because Bitcoin has a lot of morality embedded in it. And I think if you ask Bitcoiners and they complain about the central banks and the banks and all these things and governments, what they're really saying is that my morality is more in line with Bitcoin than other things. And so I, commend you in your efforts, and keep spreading the message that Bitcoin equals financial empowerment. It's a human right. It gives freedom to people that wouldn't otherwise have it. It's an opportunity to have choice in a way that we've never had before, in terms of the way that we store the sweat that drips off of our head and down our back.
Right.
And we all are responsible. We all are Bitcoin's public relations. We're all Bitcoin's PR. I didn't invent that saying, but I use it all the time. It's part why I wrote the book, so that governments can actually pick this up and be like, this is a neutral currency that can empower people, and we should protect this. And so I'm an optimist, and I wrote the book so that the message gets out there, so that it's not governments versus Bitcoin, but that Bitcoin changes the world and governments have to adapt.
So since you mentioned governments there, I noticed your book showed up in an advertisement for the American Senate. Do you take that as a sign that American senators are starting to pay attention to this message? How is it going in your own country, where we mentioned Norway a bit now?
Yes, the senator of Wyoming, Cynthia Lummis, has read my book and wrote me a letter thanking me for it. And many people in her office have also read it. And people have been giving it, passing it around in the halls as well in DC. So that's something that I'm very happy about and encouraged by. But the work is just beginning to be done. And Senator Lummis is only one senator that has a pro-Bitcoin stance. It can be repeated by others. I hope that it's repeated across parties, across borders. Everybody has a political opponent. So The president of El Salvador legalizes Bitcoin, but he has political opponents that will attack him. Well, I don't have any opinion about his politics, nor about the senator of Wyoming's politics. If you're pro-Bitcoin, that's the message that I care about. We have to get that message across and cut through all the politics. So, that's my goal, with the book itself. It's not a political book. I hope it's not. If you read it, it wasn't meant to have any political stance, so that it cuts through that and gets right to...
That was the one thing that kind of was unsatisfying. I was waiting for a punch at the end, and it just gave me the facts. Damn.
Yeah, no, it's about freedom. The message is about freedom to denominate your labor and your wealth in Bitcoin. That is our right now as human beings. It's a algorithmically based belief system. Mm-hmm. And it's based in, it's also based in physics, because and Michael Saylor talks about the energy that backs the Bitcoin network and the hash power, and how that
the thermodynamics of money.
The thermodynamics of money. There is a truth, and there's a very human quality in that thermodynamic analysis, where when you realize the energy wave that backs it, there's this innate trust that you get in it. All of that stuff is our right. And I don't need to be anti-central banking to get that message across. You just need to encourage people to buy Bitcoin, to participate in Bitcoin, to use it, and to spread that message. And hopefully we can cut through the politics.
That makes me happy to hear you say. I've introduced this idea of the thermodynamics of money to Norwegians. I haven't heard anyone bring it up in this country before, and I've been trying to communicate it and met some ridicule. A lot of people struggle to conceive of this notion. And
teach me something. Yeah, teach me something in your language real quick. How would you say a tidal wave of energy?
Oh, en flodbølge av energi.
That's what you need to...
Flodbølge av energi. That's nice, yeah.
Get the image going, that this is a tidal wave of energy that is the security mechanism for Bitcoin.
Well, I think what traditional economists, let's not start a whole new thread, but I just want to share this before we close it off. I think what traditional economists often struggle with here is that their money is kind of hocus pocus, and they've realized that. And so now today there's a lot of focus in the area of economics of how people are irrational, right? Irrationality is very trendy. Well, not so much anymore, but it was like from 2000, you had this big movements of reinvent the economic sector or whatever, under this idea that people are not rational and that prices are not rational and you can't know anything. It's like a postmodern analysis of economics. And then in comes Bitcoin, being almost like a force of physics, and going sort of directly against that trend of you can't know anything and everything is so irrational. And here we have this super rational thermodynamic form of money. And when I brought that up to the editor of the Financial Times in Norway, I've never seen such a stupefied face in my life. It was incomprehensible to him that the world could make sense. All right, ending that on a speech for myself. But thank you so much. You've inspired me. You taught me a lot. I really appreciate your time. I appreciate your book. I hope you will write another one. You had plans for another one? How long do we have to wait?
That is anyone's guess at this time. But my goal is to, well, I've started drafting the framework for the book, and I hope to be well underway with the book this year. So, I don't know when I'll be able to finish it or when it'll come out, but this book is underway.
Well, you'll let us know once you're on track, right?
Absolutely.
Fantastic. All right. Thank you so much for coming. Thank you for your time. I think we're going to shut it off for tonight. I hope you will be happy to come back sometime in the future when your next book comes out. But for now, on behalf of everyone, thank you. And
great. Thank you so much for having me. Yeah, thank you. And I'd love to come back with the second book. And thank you to your audience as well. I appreciate it.
Fantastic. Have a great day, Nik.
Take care.
Well, that was fantastic. I'm so grateful to Nik for having taken the time in the middle of the day, obviously, on the other side of the planet. This is a global phenomenon with a global mind. And I hope you guys listening to this were as satisfied as I was, because this was simply fantastic. So this recording obviously will be on YouTube. So if you liked this broadcast and you think somebody else might learn something from it, maybe you want to share it with someone and they can spend their weekend expanding their mind just a little bit. If you want to support the kingdom and everything we do, again, I don't want to be buggy, but super chat, affiliate links, Discord, all of those things can be done by you in just a second. So if you don't mind, thank you. Thank you all, guys, for coming along. Really appreciate. You're such a great audience. And you give me energy every day. People ask me, how do you find the inspiration to do this on and on and on and on? And the answer is literally only you. End of story. So we are not going to be back for Crypto for Breakfast on Friday. I have had a fever for 3 days straight, and I am still pretty sick. So I would like to take the time to recover, and I might also want to take the time, if I feel better, to go out and watch some football. So if you don't mind, I'll be back on Monday at 8:30 for Crypto for Breakfast. Please join me then. And until then, trade safely, read a good book. If you haven't read it yet, read Layered Money. And I'll see you in the Discord whenever you hang out with us there. I'm going to end this with a low time preference that feels appropriate.
I think I'll take it down the line, 'cause hard time is just a synonym for failure by design. We eat and drink our fill until we're satisfied, but are we fulfilled or only gratified? I think I'd like to wait this time, 'cause quality is fading when you squeeze out every dime. Easy money traps are set round center stage, laying art to rest inside a shallow grave, a shallow grave. Consumerism's got a vice grip on you. You're buying all this garbage and you don't have a clue. That easy money's got this whole world confused. So take your high time shit and go, 'cause my time preference is low. My time preference is low. Oh, 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 oh. It took me 30 years to find Da Vinci's ghost, watered down, destroyed by fiat crimes. And Atlas shrugs over Christmas trees, or butt plugs in the Paris breeze, Van to black and the Chicago beat. Consumerism's got a vice grip on you. You're buying all this garbage and you don't have a clue. That easy money's got this whole world confused. So take your high time shit and go, 'cause my time preference is low. Oh, and I can't tell the difference between art and some trash. It's time for hard money to kick you out on your ass. I take a little time to clean and polish up your rhymes and find a craft that you love to redefine. Consumerism's got a vice grip on you. You're buying all this garbage and you don't have a clue. That easy money's got is low. My time preference is low. Oh, 'cause all the season money's got this so confused. So take your high time shit and go, 'cause my time